Hey traders, this is Christian from Hertz Tribeca Trade Group, and it is the night of April 30th, so end of month. So this video is going to be a recap of P&L for the year and for the month of April. So I like to do these end of month recaps in terms of how we performed for the month and some of the best practices, some of the things that we did right, some of the things that we did wrong. But it's really an important step in your process of overall trading is basically to review what you did, and this should also happen on a weekly basis as well. But enough time has gone by, 4 weeks from the beginning of the month, where you can really go back and review. And sometimes what you'll find is some things that were that surprise you, right, about how you performed and about what you did. And then the whole goal of the review process is to also improve what you're doing, to consistently make tweaks and adjustments to make your trading process better, and in the end to have better results. So the review process is essential, because otherwise, if you're not doing the review process, it's very difficult for you to make those adjustments and to become a better trader, right? If you're in it day to day, trading in and out, however, whatever your trading style is, and if you're not changing what you're doing, then it's difficult for you to make improvements, right? We never get to, as traders, and as long as I've been doing this, for years and years, there's still process improvements that I need to make, because we're always battling with ourselves. And just because a trader has experience, it doesn't mean that they have figured the game out. They haven't, completely come to the point where they're like, "Hey, I've learned everything I've needed to learn, and I've conquered this, and it's easy." It just doesn't work that way in trading. We're managing on a day-to-day basis a lot of information, and a changing world as we go along. So we need to make sure that we're putting in, adjustments and not staying rigid and stubborn, and making sure that we're changing with the times as well. All right, so that's my quick summary. Of course, risk disclaimers up here. Everything that I'm going over is for information purposes only, not giving out any advice or recommendations. Also, past performance is not a guarantee of future performance. That definitely has to go along with that. So when I put this out on Twitter, I will have those disclaimers in there. I will use the my sheet from E-Trade that I get. It's nice. The broker statements, they give you a nice view of your P&L that you can that you could basically share and so forth. So again, this is a good practice. It's something that I've been doing now every month, but the performance kind of speaks for itself. I had a really nice month. I was up 35% the month of April. Year to date, I'm up 55%. Remember, I've had a couple months, and again, you'll see this when I put out the video. I'll put out this statement from E-Trade. But remember, I had a couple months where let's see if I could bring this up really quick. What did I do with this? Yeah, January was great. I was up about 31%. February, I had a bad month, right? I got caught with some positions. I got caught with some option positions on the wrong side of the market, took some losses. I ended up down in February by 15%. March was a positive month for me, plus 3%. And then this month was almost as good as January, which again, I think are unusual months, right? This is the best month since, what do they say? Somewhere in the 80s or something like that today. So you kind of have to take this with a grain of salt too. Same thing with January. I thought January was really unusual too. So the other thing that I will say to start this off, because this is a one pager on just things that talking about basically how I achieve these results and some of the negatives as well. But regardless of what kind of month you had, the way I frame this is, again, I like to use sports analogies. Even though we've got no sports going on right now, still sports is a big part of my life, and I've learned a lot of lessons from sports too, playing sports as well as watching sports. but one of my favorite coaches, and I'm a Giants fan, but one of my favorite coaches, because he was originally a Giants coach, was Bill Belichick. So even though he's with the Patriots, and I don't really like the Patriots, you still kind of take away what he does on a weekly basis and a yearly basis. And whenever you're listening to interviews with Bill Belichick, when they go, after the game or when they're starting the week and preparing for the next game, now he's not the greatest person to listen to in terms of entertainment value, but the guy says the same thing every time because the reporters will ask him, "Hey, are you guys, what's your view? Do you think that you're gonna make it to the Super Bowl this year? Who down the road do you think is going to be a problem for you? You've went to so many Super Bowls before. Do you think you can repeat?" His answer is always the same. Well, we're going to concentrate on the opponent this week, and if we win this game, then we'll concentrate on that one. So I try to take that same approach with trading. Forget about the whole year. Forget about whether you're going to be profitable, or how great of a year you're going to have. Take it 1 month at a time. Try to win that particular month. So that said, well, this was a terrific April. Tomorrow we're going to be in May, and you have to think about it as a whole new game. Right? Forget about what you did. If you had a poor month, if you had a great month, congratulations to you. But it doesn't matter. Start over, start fresh, and realize that you're going to have to win May, and make sure that what you're doing can get you to that place to have a winning month. Okay, so that's important. I say that just about every month, but it resonates with me that try to not look at too much in terms of, hey, how am I going to do at the end of the year and so forth. Just concentrate on what's in front of you, and stay focused on that, and instead of the grand scheme of things, because we're certainly dealing with enough things right at this point. But if you I can't say it right, but compartmentalize. I said that wrong. Maybe it's because I'm having a glass of wine here too as I do this video. But so observations for this month. Well, I had a lot of winners. Now, did I have a lot of huge winners? I had a few some good sized winners. But looking at my month review, and I'm going to go through a couple trades that I had. Let me see if I can bring this up here really quick. Yeah. Oh shoot, It may take me a second here to get through this back to the month. But basically, I was pretty consistent. Right, I did have some really good winners, but I also had some just regular decent size, some that were small too. But I didn't have any one or two trades that were responsible for all my P&L. They were, like I said, they were pretty consistent, and around the same size. Now, of course, I think Microsoft was my biggest winner. Gilead was a nice winner. So I had a few good winners in there, but again, I just had a lot of winners. The other thing too, right? I looked at my losers, and I had a few losers, but none of them were really large losers. So that tells me, I'm giving myself a little bit of a pat on the back, but I did a pretty good job with managing losers, because again, I did have them, but they were all relatively small. So that's important to focus on. I'm going to get to that in just a second, because as as the age-old saying goes, oh, let your winners run and make sure that you cut your losers. But that's easier. Okay, sure, that makes sense. But how do you actually do that? So I'm going to talk about that too in this video. So that kind of brings us to the next point. Oh, let me review some of those trades so that you can see. And Slack does a great job, right? So this is the Tribeca Trade Group trading room. If you're not a member, because I'm going to go ahead and release this publicly. But just in case also that you're a new member, everything gets sent in here. Day trades, swing trades. I haven't been using. I have private Twitter as well. I haven't really been sending that many trades out on there. It's just a lot easier for me to manage. I have to do what is best for me to kind of manage trades. So you can see we have a decent amount of trades. And as I'm going back towards the beginning of the month, So I'm back here the 14th, but I highlighted a couple trades for you. SMH was a good trade. It's one bullet that I want to put on here as well. Sometimes I revisited trades. Like I did this a few times. I did this a few times in Microsoft. Right, I was out in January calls, and I would put on like a not even that big of a trade, but I would put on a few contracts. I would I would take some profits, and then I would put the trade back on again. So, I as you can see, I trade a lot of different tickers, but there's some that I come back to, and I think there is some value in that. Knowing some stocks very well so that you could get into them. Like, if you get to know stocks very well, you could get into them on dips. You know where support is, you know where buyers show up. And a couple of things that I did too, which is one of the points on here too, I have to go back to this because I know there's a mix of day traders, swing traders in the Tribeca trade room. But really, like, I think you want to be as flexible as possible. You want to go where the profits are. And we saw this briefly, I think, at the beginning of April and maybe towards the end of March, where bigger moves were happening in the cash session. When I say cash session, that's 9:30 to 4 o'clock, right? That's when the market is open. However, over time, and this kind of straightened itself out as we got to the middle of the month and towards the end of the month, it went back to an overnight market. What does that mean? Well, the majority of the money is made in the overnight market, right? If you're putting trades on at the end of the day, you can often take them off in the beginning of the session. It's a little bit counterintuitive to how most people think about trading or to how retail traders think about trading, but it is what it is. If you look over time, the majority of the money is made in the overnight market. So putting on trades at the end of the day and taking them off in the beginning of the day can be much more profitable than trying to establish a trade in the first 15 minutes of the day and making adjustments and trading. You can make money during the day. I'm not saying it can't be done. I'm just saying the bigger move happens in the overnight market. Now, some people get scared of that. They're like, oh, because what happens is they get anchored to the one time that they held a position overnight and something bad happened, and they're like, oh, they didn't see it coming. There was some news out overnight, and they're like, forget it, I'm not putting on any risk overnight. I remember back in 5 years ago, it was a horrible experience, but you have to get over it. Like, if you want like if you want to get out of that of the habit of trying to squeeze little profits during the day, and realize that the overnight moves are more where the money is made. You could also trade index, but you're gonna, like, every once in a while something bad is gonna happen, and you're like, and like a downgrade happens, right? And you're like, oh man, but really that's the outlier. And that's also goes into the psychology of trading, is sometimes you can have one painful experience, just one, and it turns you away from the whole opportunities that are out there. So bottom line is, because I've talked to traders about this, and they're like, yeah, I just don't trust this overnight market, because they've had that one or two times where something happens, some type of announcement comes out, and you feel like, oh geez, I got really burned by it. But I'm telling you, over time, it just is what it is. So, like, this was one particular day. This was back on April 6th. Took all my trades off for profits. Apple, Microsoft, Peloton, CrowdStrike, and then you could kind of sit back and let the market come to you. But yeah, I highlighted a couple trades in here. This was also another really good trade for me this month was Adobe. This was one bad one. Um, well, this was a good trade, but this was one of my worst losers of the month, and it wasn't even that big of a loss. So let me dig into this. So let's talk about. So again, I always like to show examples because people don't do that. People just speak hypothetical, and this isn't hypothetical. This is real. But how? So how did I? Talking about letting your winners run and cutting your losses, right? So making sure, and you've probably heard this before, but before every trade you go into, this is what has helped me, is pre-planning the trade. Figure out on the chart where you want to take this trade off. Figure out as well what's your stop price? Because these are equally important, right? Because you have to make more in your winners than in your losers. So if you can pre-plan things, we do this a lot with the market webs. That's the beauty of the indicator that we use, right? So if you're using like we use the 1 hour chart a lot. I use the daily chart a lot. I try to use what's called version point of controls, VPOCs, just to kind of show you, if I can maybe scale out here. I want to give like a real life example, but like something like this, right? Where we're putting on a trade somewhere in here, and I'm noticing that there's a version point of control up here, right? And those are things where either I'm using the 1 hour chart or the daily chart, and I'm saying, hey, this is where I think the stock can get to. Now, two things with this. I usually will take targets along the way because nothing is for certain. Nothing is 100% certain. Also, so that's number one. And then I like to take like my final target at a version point of control or at the top of value, right? We talk about that a lot. Taking, if you get in the bottom of value, taking the target at the top of value, right? So something like this, waiting to, this is not a good example, but I don't know, service now, right? You establish a trade here. Here's your top of value. That's your place where you want to be taking. So that's what you should be setting up. Now, also, you could pre-plan that, but if it doesn't work out, making sure that you're taking the stop, because that's the whole key. Like if you're not pre-planning your stops, it's very difficult to say, and when you're in the heat of the moment of the trade and it's starting to break down and you're kind of at a loss. Instead of trying to figure out in the heat of the moment what you're doing, pre-planning, saying, okay, boom, it went through my stop. I'm going to get out of this trade, and immediately once you get out of the trade, put an alert back above your stop. So if it's a fake out, because this happens to me a lot, I'm going to get into some of the negatives, but I get stopped out of a trade, and then 2 hours later, the stock is back above that level and is going to where I thought it was going to go in the first place. So if you don't do a good job monitoring, that the first thing is honor the stop that you put out there. But make sure, like, don't, once that stop goes off, don't get frustrated and be like, oh geez, I'm not gonna, this stock stinks, I'm not gonna look at it again. You have to get over that, and you have to be able to understand that you're going to get whipsawed sometimes. So stick with it. If you like the trade, just make sure like you're honoring the stop. Because we don't know how far the stock is going to go. If we're going long, you don't know how far it's going to go down. So make sure that you put an alert back in place once you take your stop. So this way, even if you're disgusted, you put the alert back on there, and if it goes off, by that time, hopefully you're over it, and you can reestablish the trade. So again, very important, and I think what this process that I'm going through, I think really separates the winners and the losers. You have to take the emotion out of the equation. You really do. Some traders, they don't, right? And they can't get over their egos in the way. I'm not going to get out of this stock. I'm gonna ride it out. I'm going to add to it and so forth. Being stubborn, which is which is what I am from my parents and so forth. You have to get over being stubborn in trading. So if it's a weakness, recognize it and get over it. Next, did I have mistakes? Absolutely. Did I have mistakes? And I still, did very well for the month. I cut a few trades off and they ended up being big winners. I took trades off that I just did one the other day, where there was no sell signal. I just couldn't believe how fast the stock was moving. And, I was pleased, right, that it went up as much as it did. This was SEDG, and this thing went up from, I think I established it at 110, and the damn thing went up to 121. I think I got out of it at 116. So I left some money on the table. And there was no reason, if we go back to the 5 minute, and I'll brush up, so that's something, again, we want to make sure that we squeeze the most profits, out of something. But this thing went up to 120. It actually ended up going up to 122, but I left some on the table because I think I unwound it in here. And notice there was no sell signal, right? So I left about $4, $4 or $5 on the table in this trade, because that was a beautiful trade that was yesterday in SETG. So again, going back to letting winners run, make sure that you leave the runner on, or leave a runner on. There's nothing wrong with taking two or three targets in that last 15-20% of the trade. Even if it goes down a little bit, well, you still, try to get that big winner, because it's important to make sure that you do get the big winner every now and then. So I did cut off a few trades. What else? That, and probably what I had already mentioned. I did get stopped out of one or two trades, and I didn't get back into them. And I was like, holy cow, this thing went up. That happened to me, I think, two or three times. I'm trying to think of the exact situation, but I can't think of it off the top of my head. But I do remember, I'm like, you got to be kidding me, when that happened. And again, that's because I did not place an alert after I got out of the stock. I moved on to something else. I wanted to talk about this concept too: options versus stock. I probably traded about 75% of what I did in April was probably 75% stock, 25% options. So I traded a lot more stock. I just felt a lot more control. Remember, for most of the month, the VIX was around a 40, 50, and I didn't want to suffer through vol crush, right? As the VIX went back down to the low 30s, that means that the option prices go down too, because one of the components of option pricing is implied volatility. So I traded a lot more stock. I just felt also a lot more control with that. Anytime, like I did have Microsoft January calls on, right? January 2021, and those worked pretty well. But there's a couple times I was even frustrated with those because they weren't going up as much as the stock was, because the VIX was going down. So that's something that, now there's place for options. But I think I'm going to probably continue with that ratio, because I am finding that I'm having more success with trading more options. It just suits my style. I'm also managing a trading room every day, and it's difficult for me to do everything that I'm doing: watch the tape, posting option activity, answering your questions, and so forth. It's a little bit easier for me to just set alerts, because you can't really do that on options. They move too quickly, especially if you're trading, anything under 3 months maturity. So I'm going to stick with that. It's been working for me really well. If anybody ever has a question, if I take a stock position and you want to know how to trade the option, you could post the question. I'm happy to answer it. But it's working for me really well, so I'm going to stick with it. Did I follow option activity? A little bit. One of the things too, I think retail traders make a little bit of mistakes with, and I used to make these mistakes too, is everybody thinks they see option activity on the tape and they think that they know something. Those are few and far between. Sometimes what traders will do is they won't honor the stops because they think that they got into this trade because there was aggressive option on the tape and they think that they know something. And a lot of the times, those can end up being your biggest losers. It's happened to me before, so I'm just going to tell you to. So I'm not saying like following option activity and reading option activity is a bad thing. Just know that a lot of the trades that we see, they don't work out, right? And there's a huge bias on this on Twitter because no one recognizes this. Everybody only tweets the winners, right? If you look at anybody who tweets a lot of option activity, go through their feed. They probably talk about probably 20 or 30 different tickers in the course of a week. How many do they retweet? They retweet about 3 or 4 that are the winners. Maybe a little bit more than that. So if they're talking about 30 different tickers throughout the week, right? This one saw option activity. This one saw option activity. Maybe they're retweeting 4 or 5 of those 30. Right? So put those odds, figure out what those odds are, and if you took every one of those trades, right, you're going to have negative P&L. There's no sense. There's no way. So just realize that there's a huge bias of option activity on Twitter. Go through there's plenty of people who tweet out option activity, but they only go back to the winners. They never talk about what happened in a loser. So it's a huge bias, and I think retail traders really get sucked into this because you hear about on TV, oh, you can make huge potential profits following option activity because it's the smart money. It's 100% bullshit, and you know it. And if you've been trading for a while, you know that that is all bullshit because the majority of these things, they don't work out. Now there's a couple. There's value in it, right? When we see Microsoft calls over and over and over, right? They're establishing a position, they're accumulating a position. There's some value to it, but don't fall for the smoke screen that goes on. But so I did use this. Microsoft was one of those cases, and it was one of my bigger winners. So I'm not discounting at all. I just want you to be realistic with this and don't get, you know, caught up in the snake oil salesman. So looking so looking ahead, things that I need to do, everybody needs to do, is continue to improve, and that's part of the review process. Be consistent, right? Making sure that you do have more winners than losers, or if you have the equal amount, making sure that you're cutting your losers quick. It is what it is. It's math. You have to cut those losers quickly. If you don't, if you're holding the losers too much, and if you can't control the losers because you're trading, let's say, short-term options, then perhaps you need to make an adjustment, because it's really difficult to take stops on options, especially short-term options. It just doesn't really work. I think honoring the stops and so forth, that really helps in either long-term options or in stock trading. It's too difficult in short-term trades. The one thing I will tell you as well that has helped me is position size, right? If you're going to trade short-term options, what has helped me is I only put in what I'm willing to lose, right? So the premium is my stop price. So if I get into an option for $1.50, that's the $1.50 is my stop, right? I know that's difficult for some people to get their head around, but that means I don't put on a big position in short-term options. That's the whole key. So that has helped me to be consistent. Again, we already talked about stops. For me, it's following price and trend, but realize if the market changes forms, right? We talked a little bit about that in today's video, that sentiment has completely changed in the last week, right? And a couple weeks ago, it was the sentiment was way to one side of the fence, where everybody had a huge cash balance in terms of the big investment funds. They were under exposed in equities. Well, that's changed significantly in the last 2 weeks. So we have to kind of take that and use that information that we could see a lot more profit taking on the tape. Carrying less positions versus more. That has also helped me when, even though it's kind of burned me a couple times this week because of these big gap ups, and I realized, I'm like, hey, I would have been nice to keep on a few more positions, but it really kind of keeps me fresh and not troubled. Like I'm able to sleep at night, right? So it's okay to have a couple positions on, right? If you're following price and you think that price is going to move in the overnight session, because like I said, the majority of moves happen in the overnight session, but don't get overexposed. Right, and that's by putting on too many positions or too big a size. Position size is a big thing. So again, trade the overnight move versus intraday scalps. So that's it for today's video. I hope that helps. If you have any questions about this, but again, I try to give you both real trades that I did, examples, and all that is chronicle, is in our Slack channel for trades. And then I also try to give you examples of what I did that worked and did not work. Okay, guys, have a great night, and thanks for watching.